Hello traders and welcome to another video review. Today is Tuesday, 20th of the April 2021. Let's take a look at the beginning of our video at the Forex calendar for today. As you can see, not much is going on today, but there are some important data scheduled for release today. For all of you who trade the Australian dollar, we got the monetary policy meeting minutes released already, 2:30, so we'll take a look at the Australian dollar for sure. But the kind of a key data for today are data from the United Kingdom: climate count change, count rate, and average earning index. As you can see, all of this data are worse than expected, including the average earnings, which are dropping from 4.8% to 4.5% on the 3-month base. Despite this data, we don't have any other important data from the during the London session, and during the New York session, as you can see, there is nothing here, but we got New Zealand data scheduled for release almost quarter to midnight. Consumer price index, which for the first quarter, which is expected to grow from 0.5% to 0.8%. So that means there are some inflationary pressures building up in the New Zealand. So let's take a look at the British pound today. At the beginning, we will zoom in, and what we can see today on the daily time frame chart. As you can see, we got ABC pattern completed, right at the level of 1.3670. We have a breakout above this trend line. We are back inside of the main channel, so it all looks like we are under the influence of the bulls. Moreover, 1.3918, the high from the 6th of the April, had been violated clearly as well. So we got this big candle here, big green candle, but the main technical resistance, 1.4017, had not been violated yet. But please notice that this move here from the lows is in 3 waves again, right? So we got ABC wave here, and we have I guess it looks like we got ABC wave here. So this is the wave A, this is the wave B, and this is still the wave C, of course, of the same degree. So to avoid any confusion, let me just change the degree. I think it was the minor, or it was the minute. Okay, let's just stay with the minute, and this the same will be minute. So that's the same degree. And moreover, what we can see here is if we make some kind of Fibonacci measures, you can see we have hit 127%, almost hit 127% of this extension of the wave A at 1.3996. So it's almost 1.4 basically. And if there is some sort of a reversal below 1.4017, then we might say more surely that this is 3-wave up move, wave A, wave B, wave C, which is still a corrective in nature. All right, so that's not an impulsive move yet. For now, we got only 3 waves. Of course, we can break above 1.4017 and hit 161% of the Fibonacci extension at the level of 1.4084, and it still will be considered as ABC correction, right? Correction continuation. So please pay attention on the levels and on the market reaction on the British pound right now, because it doesn't particularly looks that bullish as it seems to. So that's why the caution is needed. So that's our technical support right now. We are trading under the technical resistance. Please keep an eye on the current market developments. We will see how this will develop in the future. Of course, momentum is strong, it's positive, 64 points. We are way above the level of 50, the neutral level, but we are still not hit the 70%, which is the extremely overbought conditions. It might happen when we pass the 1.4017 and head towards 1.4084. So that's the British pound. And I would like to take a look at the indices, American indices, because we got a very interesting market behavior there. As you can see, we hit 127% on the S&P 500 index yesterday, 4,181 points. High was made 10 points higher, but yesterday was a down day. Clearly, we closed below the open of the previous day. And that's exactly the Friday of the previous week. So 100% we can this remove because it's no longer needed. There you go. So if we reverse here, we have this short-term trend line, very short-term trend line here. So if we will reverse below this trend line, out of the extremely overbought market conditions, the market might get back down to the channel, right? So we have this technical support here. Let me point it out for you. We got this technical support, 4084, and if this technical support is violated, we are back in the channel, and then we are directly threatening 4000 points level, which is not very not particularly good for bulls, right? So that's the S&P 500. Dow Jones, let's take a look at the Dow Jones Industrial Average. Almost the same situation, but this down day is not that much significant. Here we are still heading towards 100% of the Fibonacci extension at 34,670. So that's still the target for the market participants. Please keep an eye on 34,000 as well, because this is the recent high, and the last key technical support is just right around the level of 33,605. So that's a clear situation. We are still going up. Occasionally we have some pullbacks. We have a pullback. This might be a pullback before we will hit 34,670 on the 100% extension of the Fibonacci on the up move of the last significant move up. And the last thing I would like to show you for today is crude oil. Crude oil. Why I'm showing the crude oil? Because we are heading towards our target. We are still heading towards our target. As you can see, our target is 65.19, and this recent bounce here is still very confusing, very complex, because this looks like a correction. It doesn't look impulsive, right? This 1, 2, 3, 4, 5. This down move looks clearly impulsive. This looks still corrective. It looks like a B, and now we are in the wave C, with the target of 65.19 as the top of the recent rally, corrective rally, of course, recent corrective rally on the crude oil. We should hit the overbought conditions, and then market should reverse again in order to complete another 5 waves down in the wave C, and then we'll have kind of a zigzag pattern, corrective zigzag pattern on the crude oil, and this would be the biggest correction in time and price since the lows of beginning of the November 2020. So that's very important to keep in mind. This is already the biggest correction right now. This is a bounce, but it doesn't look like we've completed the bounce up, and this is only a corrective move to the upside, and there should be another, at least one wave to the downside, possibly in form of the 5-wave impulsive structure in the wave C on the crude oil. Of course, if we break If we break below the level of 62.13, this is the black line, then of course we have the first confirmation of the top for the wave B, and then we can expect the market to go even lower during the next days. This is the daily time frame chart, so during the next days we should go as low as 60, and then of course the lows of the wave A, which is 57.09. So this is how it looks like for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. Bye bye.